Hi, I'm Dr. Dave Janda, and please welcome to our Operation Freedom platform, WeThePeopleProcessing.com. You know, are you tired of being threatened to be canceled just because you have a company focused on liberty and freedom? Well, worry no more, folks. WeThePeopleProcessing.com is your go-to merchant services, freedom-based company to provide business service payment solutions. We the People Processing provides their clients a cancel culture-free platform which is domestically based. They provide competitive rates, no contracts with next-day funding, a fully vetted and like-minded financial infrastructure, and full support for integrations, implementation, and e-commerce efforts. Bottom line, WeThePeopleProcessing.com focuses on defending your company's free market growth, values, and future. Check them out at www.WeThePeopleProcessing.com. Once you're on the site, enter in password Operation Freedom or call 855-499-2024. That's WeThePeopleProcessing.com. Then, when on the website, enter Operation Freedom as your password or call 855-499-2024.
My next guest also focuses on all the above. He is not well liked by the deep state because he focuses on accountability and transparency. Ed Secret is a keen observer of the financial scene and director of a fantastic organization, the Gold Antitrust Action Committee, so-called GATA, G-A-T-A, GATA.org. He is the editor and founder of The First Thing I Read 5 days a week in the morning. It's called Ed Secret's Gold and Silver Daily, or Gold and Silver Digest. Ed Secret's Gold and Silver Digest. Ed provides information that you need to know that the bought-off lamestream fake media will never touch. And it positively impacts your freedom on many different fronts. It is my honor and my pleasure to welcome back my friend to Operation Freedom and our platform, Ed Secret. Ed, welcome back to Operation Freedom and happy Father's Day.
And happy Father's Day to you too, Dave, and to all the applicable listeners. Thanks for having me on.
I mentioned several times today, and my dad, who's in heaven today and who this show is dedicated to, on Father's Day when we used to go out for a walk and we'd walk by some women and children, each one of them, he'd look at him and go, "Happy Father's Day, happy Father's Day." And I go, Dad, that kid is 5 years old. He's not a father. That woman, she's not a father. Dave, the key with being a father is caring more about others than you do yourself. And every man, woman, and child is essentially falls in that category. So happy Father's Day to all of our listeners, as Ben Janda used to say. And Ed, let's focus on our economic scene and the financial scene. The past several months have been indicative of what I believe is a stagflation environment. Do you agree with that?
Well, the thing is that this stagflation is certainly here. I mean, we're seeing runaway inflation in just about anything that you want to go out and purchase these days. And the economic activity that we're seeing is not only not very strong, but it's only there because the Federal Reserve is pumping trillions of dollars into the economy to make it so. So we have stagflation, but the moment they stop printing money, it's going to be far worse than that. But inflation, if you think it's bad right now, Dave, you haven't seen anything yet. It's going to get far, far worse in the months and years ahead. By next year, the economic landscape in the U.S. and across the Western world and most of the world is going to be totally different than it is today. We're going to have runaway inflation, the likes of which we haven't seen since the 60s and the 70s.
And Ed, the global elite that are part and parcel of the Federal Reserve, they're fine with rampant inflation, aren't they?
Oh, absolutely. I mean, this is the whole plan. The thing is that, because of the amount of debt the world is in, I don't care whether it's government debt, corporate debt, private debt, it's now unpayable. It's been unpayable for many decades. And the thing is that there's only two ways out of debt, Dave, for anybody, whether it be you, me, or government. You either default on it or you inflate it away. And of course, default isn't an option for any major government of the world or any major corporation because the results would be disastrous. So there's only one way out of this. They must massively inflate and debase the currencies, especially in U.S. dollar, but of course that will debase all other currencies as well. So the only way that they're going to be able to pay this debt back is like they did in the Weimar Republic, debase the currency to a fraction of what it is today, so the debts will be inflated out of existence, and we're just seeing the thin edge of the wedge right now.
Well, and Russia gave us a bit of a hint, right, over the past couple of weeks here. Russia's $186 billion sovereign wealth fund dumps all dollar assets. Russia's sovereign wealth fund, officially named the National Well-Being Fund, has decided to dump all of its dollars and dollar-denominated assets in favor of those denominated in euros, yuan, or simply buying precious metals like gold, which Russia's central bank has increasingly favored for its own reserves.
Oh, absolutely. I mean, the Russia's central bank owns just about 3,000 tons of gold. They haven't added that since, I think it was March of last year. But as you pointed out, their sovereign wealth fund has announced that they're going to be purchasing gold. And there's an additional story on that was in my column a couple of days ago, which I wasn't aware of, and that's the fact that 20% of the money that's in the sovereign wealth fund is going to go into gold and precious metals. And that's a huge portion of the fund. So if it's certainly going to make a difference in the gold market, because all the gold that Russia has been selling in the open market is going to be disappearing into their sovereign wealth fund for many, many months until they come up to the 20%. So there's no question about it. They see what's happening in the West, and they're preparing for it. And the way they do it is like anybody should be doing right now, is buy precious metals, and that's precisely what they're doing.
And here's the key, Ed. And this needs to be emphasized. We have listeners in all 50 states, on average 120 countries worldwide that listen to this show or either download this show. Ed, when we look at what's happening, many people got in touch with me this week knowing you were going to be on the show and said, wait a minute. If you look at the data that came out this week, core consumer prices surge at fastest rate since 1992. Services survey signals stagflation as firms increasingly pass on higher cost declines. U.S. housing starts disappoint in May. Permits plunge. U.S. export prices, though, explode. Okay, many people, they send me these articles. You're going to have Ed Secret. You got to talk to them about this because there are all these headlines of inflation, stagflation, and the like. Yet, what happened in the precious metals market, Wednesday, Thursday, Friday, if you will, was so egregious. And when gold and silver prices should have been flying, people said, high, they were getting beaten upon. And as I outlined to Ed, and you can correct me, Ed, I said, listen, do not confuse paper manipulation, algorithms, AI programs, high-frequency trading of paper assets. Do not confuse that with physical metals and their prices.
Absolutely, and the reason for that is that the precious metals are set in the COMEX futures market. You're not seeing a true supply-demand price for gold, silver, platinum, palladium, or most commodities, actually, because they're controlled by the paper hangers in the COMEX futures market. And like we've been talking about, inflation is rampant and going to get much worse. And what happened with the Fed news on Wednesday was the fact that there are 4 traders out there, 4 large traders that are short these precious metals in the COMEX futures market, and they're the 4 corp companies that are controlling the price. And I think the 2 biggest ones are Citigroup and HSBC. And they know that higher inflation is coming. They know what the government's going to do. They know that the central banks are going to print money hand over fist. And they're short these markets. In other words, they're betting the price is going to go down. So what they did is they used the Fed news as cover to go in there and blast the markets lower so they could cover as many short positions as they can, because They have to cut their losses, which I think last week were $12 billion, and are down, according to silver analyst Ted Butler, down to about $9 billion now. But they're still on the hook, major, big time short in the precious metals. But they want to get out because they know that far higher, not only commodity prices, but precious metals prices are in the cards, and they're just anxious to get out before the price takes off. And trust me, I think this is their last swing for the fences. And in 6 months' time, we're going to be looking at gold and silver prices that you frankly can't believe.
So, Ed, one of the issues on the table is this Basel III kind of working its way through the snake. And at the end of June of this year, there's potentially going to be some further implementation of Basel III, and then possibly, then again in January of 2022. Educate our listeners on Basel III, and educate our listeners on your take if it's significant or not.
Well, Basel III is an agreement that came up with by the Bank for International Settlements that all banks will have to adhere to. At least European banks will start having to adhere to on June 30th, and which will affect the U.S. banks, of course, in some way. And I think the banks in the U.K. don't have to take it into effect until January the 1st of 2022. So there's a 6-month window here. And basically what they're saying is that they're not going to allow paper gold to be 100% asset on any bank's balance sheet. It's going to be something like 85%. So the paper trade's not going to be very profitable. Matter of fact, they're going to be operating at a loss on it. So basically what they're trying to do is they're trying to end this price management scheme very gently. And, of course, there's lots of commentators and so-called experts out there that have all this mapped out. But one thing is for sure is it's just the bank's way of trying to get out from under this price management scheme, not only in gold, but in all the precious metals and all commodities, because, inflation is rampant and they know they're going to have to let commodity prices rise. So is it going to make a difference? I'll tell you the truth. I think so, but I'm no expert on this. I'm just, I haven't put a stake in the ground in this. My comments and my column have been, let's just wait and see what happens as the days and weeks wind down, because we're only, was it the 28th? So we're only 8 days or 10 days away from this thing. And we'll see what happens in the days and weeks ahead. But do I consider it bullish for the precious metals? You have to be bullish about it. But as to how soon it's going to take effect and how big the change is going to be, I don't know, and nor does anybody else.
And Ed, when you look at the charts of gold and silver, platinum, palladium, at least when I look at them, and I look at what's called their RSI values and the like, it appears that the criminals have gotten about as much blood out of the rock as they can get. Is that a false interpretation?
I would say we're far closer to the bottom of this engineered price decline in the precious metals. Not just the precious metals; it was in copper and a whole bunch of raft of other commodities that also got hammered into the dirt. So, if I would suggest that if you were considering buying any precious metals or precious metal stocks, we're very close to the bottom, and I'd be buying the stuff with both hands if that's something that you feel you should be invested in, which I think you should be in my personal opinion.
A listener said to me this week, you're going to have Ed Steer on this week. He goes, I haven't been in precious metals duration as long as Ed Steer has. I think this person said they've been in it about 8 years. And he said, I've been in this 8 years, and this person said, I'm really frustrated. I get mad. I get frustrated. I know what's coming down the road, and I know how this is being manipulated. Could you please ask Ed Steer the following? He never seems to be frustrated with what's happening, and he's been in it a lot longer than I have. And how does he cope and deal with it? Because he deals with it much better than our listener said they do. So what's your secret, Ed?
Well, the secret is that I've been at this for more than 20 years now, and I used to get really upset about it. And I'll tell you what, I saw the price move this week, and you saw the big banks hammer the prices into the ground, And of course, I was less than enthused. But the thing is that, I've seen this movie before. Everybody's seen this movie before countless times over the last 5, 10, 15 years. And sooner or later, this has got to end. This price management thing's been going on since Nixon took us off the gold standard in August of 71. And this price suppression scheme and the precious metals and all commodities is going to come to an end someday. And the shortage in silver that we're seeing in the retail and wholesale market means it's going to come to an end pretty soon. So, I started on this when I'm in my early 50s. Now I'm in my early 70s, and it's been a career. And I'll tell you what, I'm just sitting here waiting for the whole thing to end, and the end is certainly in sight. But, I may sound calm and collected, but I'm just as frustrated and happy as the rest of the precious metals investors out there. But I can tell you right now that when it does come to an end, they will be richly rewarded for their patience.
And we're speaking with Ed Steer, folks. Ed Steer's Gold and Silver Digest is what you want to put in your search engine and what you want to subscribe to. I do. I'm a proud subscriber, have been for many years, and it's fantastic information. It's the first thing I read every morning. And let's address the shortage issue of precious metals. In your 20-plus career and looking at supply and demand, where are we on the scale and the spectrum as it relates to supply of precious metals and demand of precious metals?
Okay, the supply of precious metals, gold and silver, is steady at best, and in silver it's been in decline for the last 2 or 3 or 4 years, and gold is basically flat. But in terms of demand, it has never been stronger in the history of the planet. Gold sales are through the roof, but it's silver. Silver is where it's at these days. And the silver shortage became apparent starting about a year ago, and then all of a sudden the Wall Street, the Reddit Wall Street silver crowd showed up in force. I think it was in January. It's only been, 6 months, and they showed up, and they have 120,000 members, and they have been a force to be reckoned with in the retail silver market. And they've just been buying everything in sight, and good luck trying to find silver out there. And if you do find it and able to buy it, the premium on it is so huge that there's just nothing to be had out there. And the powers that be are staring in the face of a genuine silver shortage, not only for the retail user, but also the industrial users as well. And of course, this can't go on forever. And sooner or later, this market will break, and we're going to be looking at a 3-digit silver price before this is all over. So if you can find the stuff, I urge you to buy some, whatever you're comfortable buying in ounce terms or dollar terms, but please go out there and buy some, because it's almost impossible to find these days, and it's been like that for 6 months now.
And let's turn to the mining companies. Many people have inquired to me saying, look, the companies that get hurt the worst by this egregious paper manipulation, whether the algorithms manipulating the paper price, the high-frequency traders, or whatever it is, why do the companies, the mining companies, that are the ones having their bottom line affected the most, why are they so mute? Why are their board of directors? Why are their CEOs, with the exception of Keith Neumeyer? He's been out front for years saying, hey, we got a problem here. This isn't right. But why are these companies so mute when they leave the heavy lifting to people such as Ed Steer to expose this and to speak about it, and they remain silent?
And I'll tell you what, I've been asking that question, as have others been, for the last 20 years or so, and you're absolutely correct. Keith has been out at the forefront of this, speaking out about it. All the silver mining companies know about it. All the gold mining companies know about it. It was a well-kept secret 20 years ago, but now it's totally out in the open. They all know what's going on. The long and the short of it is because the management is either too scared to speak or just doesn't want to address the issue. And the other thing, which is really horrific, is the fact that the World Gold Council and the Silver Institute, the big shareholders and the big stakeholders in those two institutions, which are supposed to represent the mining companies, are basically all owned by the deep state players. So their principal job, as Chris Powell said about the World Gold Council, is to prevent a real World Gold Council from forming. They're there not in the interests of their members, but to just keep the lid on the prices like everybody else. It's the insider track on this is just as ugly as you can possibly imagine.
You know, Ed, in your Gold and Silver Digest that you put out 5 days a week, you put it Tuesday through Saturday. In yesterday's edition, at the end of the week, you kind of do you always do a little summary section, but on the weekend it's a bit longer in length. Your summary section in yesterday's column was brilliant. In our last minute and a half here, can you give our listeners just a little summary of what you said? Because it was absolutely off the charts outstanding.
Oh, wow. Okay. Anyway, what I did basically said, as I said, you know, the Fed is basically going to print money until the cows come home, until they get the level of inflation they want, which is huge. They want huge inflation no matter what they're saying to the public. They want huge inflation, and people like Paul Tudor Jones and Goldman Sachs are saying if that's what they're going to do, go out there and buy all the commodities and precious metals that you possibly can as an investment strategy, because it's the only thing that's going to survive this. And if we get a bull market in precious metals and in precious metals and commodities, it's not going to help the bond market or the stock market in the general equities, and we're going to see a rush from the paper side of the street to the hard asset side of the street that's going to make your eyes glaze over before this is all done. And it'll take the currencies with it, principally the U.S. dollar and the New World Order crowd headed by this Klaus Schwabe of the World Economic Forum is going to bring this house of cards down, and we're basically going to go back, set the country back to where we were back in the ancient times when it was basically slavery.
Ed, I'd like to thank you for everything you have done, are doing, and will do. Folks, I encourage you, subscribe. Ed Steers Gold and Silver Digest.